The European Central Bank elected to lower its benchmark refinancing rate to 0.25% from 0.5%, while the rate on the marginal lending facility was reduced to 0.75% from 1%. The euro is plunging and right now it's trading 1.1% lower against the dollar. I'm joined now by Natascha Gewaltig, Director of European Economics at Action Economics in London. Natascha, we saw a huge drop in the euro-dollar today, which shows what a shock that this rate decision was to the markets. Do you think the markets have gotten complacent?
Well, it was a reaction of surprise. I mean, you saw a huge jump in bond futures, a drop in yields, especially in countries such as Spain and Italy, where long-term yields went down very sharply. And, of course, stock markets rallied. So, yes, it was a reaction of surprise. And I don't think it would necessarily that markets were complacent, because after the sharp drop in inflation, rate cuts had been priced in to a certain extent, but then been priced out again. And I think it had to do with the communication policy of the ECB as well. We had not so long ago Rodney sort of trying to shrug off any idea of a rate cut. Then we had source stories yesterday even saying that the ECB would likely wait until December, quoting some unnamed official. So I think it's to a certain extent the communication policy of the ECB that is to blame for the shock reaction today. But of course, it was a positive shock reaction in the sense that yields came down and stock markets rallied. So from that point of view, it was a positive shock.
We saw a slump in Eurozone inflation to 0.7% in October, far below the ECB target of just under 2%. Do you think this was the main reason for the rate decision today?
I don't think the number alone was the main reason, but of course, as Draghi said, the issue is that with the very low number in October, the forward projections apparently have been changed as well, and I think we will see that in the December updated set of staff projections. As Draghi said today, inflation is expected to remain very low for a prolonged period, and I think that clearly was one of the reasons the ECB decided to lower rates again today, and maybe also with view to the dollar, because what we also have seen today, yes, as you mentioned, that there was a huge drop in the dollar and huge drop in the euro, and of course the strong euro was to a certain extent part of the reason behind the low inflation numbers, because it has depressed import price inflation to a very large extent. So to a certain extent, all this plays together, and the weak inflation outlook clearly was the main reason for the ECB cut today.
Natascha, what does this rate cut tell us about the state of the Eurozone?
I think, as we've just said, that it tells us that the inflation outlook is very low, but also if we had a really strong set of survey numbers, of growth numbers in the last month, then maybe the ECB may not have reacted as it did today. And of course, the fact is that the growth numbers have been a bit shaky as well. So, and to a certain extent, the positive outlook for the economy was undermined to a certain extent, because especially the survey numbers looked a bit shaky and actually took a setback last month or this. So that shows that on the one hand we have very low inflation environment, on the other hand we have a recovery that's still very, very shaky and with downside risks. So in this situation, the ECB obviously felt that another rate cut was warranted, although I don't think it really will do that much on the economic front, and I also don't think it will revive lending very much. But of course, it is a signal to markets that the ECB is taking not only inflation risk, but also risk of prolonged downward inflation pressures very seriously.
Mario Draghi said that forward guidance was successful. What's your response to this?
Well, I don't think it was really successful, because I don't think markets really believed that the ECB would really decouple itself from the Fed. And even though that the ECB had an implicit easing bias, each time fears of monetary policy tapering in the US flared up again, you could also see that in the reaction in the Eurozone. And I think markets always believe that the ECB would effectively follow the Fed, especially as they believed that the ECB had a hawkish bias. And to a certain extent, this rate cut today is a clear signal that the ECB is more dovish than the Fed, that the ECB can cut rates even if the Fed is thinking about policy tapering. So it needed this. In that respect, the rate cut today was needed to give the forward guidance a real strength that the markets didn't believe it had before. So I don't think the forward guidance was successful so far. After today's move, I think markets will listen more to this forward guidance the ECB has to offer.
Natascha, thank you very much for joining me on the line today, and that's all we have time for now, but do check back later for further updates and interviews. For now though, it's goodbye.